Wonderful, good morning and good day. Mainz and Money 2015 here in London, and we start the first day of the show here, with a quite famous interview partner. I'm always happy when I have him here with me, Ronald Stöferle, out of Vienna originally, and he's a fund manager from Incrementum in Liechtenstein, and we want to talk about gold, silver and the markets, of course. Ronny, good morning.
Good morning, Jochen.
Gold and silver. I mean, it has been the last weeks. It was, again, a total disaster. It was horrible, not only for us as investors, even if you are a bullion investor, it's only good when you are buying now. But what happened this week, like $1,044, I think we were on Monday yesterday. And do you think that was the bottom?
I think we are close to the bottom, but I think the market still wants to see the big number, which is $1,000. In general, I think that gold at the moment is a function of the strong dollar, and we have to ask ourselves, what's the reason for this dollar strength? Because in many different currencies, for example the euro, in euro terms gold is up 4% this year. In South African rand it's close to an all-time high. In many emerging market currencies is doing extremely well. Gold is performing well in Canadian dollars and in Australian dollars. So the whole world is only staring at the dollar price of gold, while it's developing quite well in many different currencies. So the reason for this bull market in the dollar is, of course, the expectation of a huge rate hike cycle in the US, and you already see me laughing.
I don't see it.
From my point of view, it will be the shortest and the shallowest rate hike cycle in the history of the Federal Reserve. We positioned ourselves for a very tiny cycle in the US. The market still believes that there might be 4 rate hikes in the US in the next year. I doubt it. And there's a very interesting graph that I'm going to be showing at my presentation. It's showing, first of all, the dollar, and on the secondly, commodities performing after the first rate hike. And the interesting thing is that the dollar actually got weaker after the first rate hike. So for the first, I think, 4 months, the dollar on average got weaker 8%, which is quite significant, and commodities started performing really, really well after the first hike. So for me, it's a classical buy the rumor, sell the fact. So I'm already kind of hoping that the Fed will raise 25 basis points in December, and I think this might be really a catalyst and a turning point for gold and the commodity sector.
So that could be then that we are very close, because we expect in the next 2 weeks the rate raise by Janet Yellen, and I mean they should go at least to 0.25%. But honestly, when you raise interest rates from 0 to 0.25%, or in China from a truck falls down a bag of rice, I think it's the same. It doesn't matter, isn't it?
No, it doesn't matter, of course. I think the fact that the whole market is only focusing on this tiny rate hike, that already shows you how dependent the market is on cheap liquidity, on low rates, and that the system is not healthy at all. I even could imagine that they won't do 25 basis points, but 0.1%, so 12.5 basis points, which would be even worse. We know that Janet Yellen, for example, when she's on a plane flight, she's usually 3 hours earlier at the airport. So she's really about making everything very safe and secure. So perhaps it's only gonna be a even tinier rate hike. But as I've said, it shows that those discussions are kind of ridiculous.
Let's come to something different. I want to ask you, because you are in all areas, in all aspects, you are very firm. I want to talk about base metals, because these days we talk only about gold and silver. But I think even the base metals are getting very, very interesting, because we saw copper at nearly $2 per pound. Now it's $2.09 this morning. Do you think we have the bottom here? Because I have the feeling Dr. Copper is really at the bottom, because it's totally oversold and totally overshorted.
It seems so, and I'm having a very close look at commodity currencies as an indicator for commodity prices. So Canadian dollar, Australian dollar are very good indicators for the commodity space. And in fact, the Australian dollar is performing really, really well since August. It kind of marked the bottom. So I think for copper is basically a China story. That's what the whole world regards it at.
Yeah. I think it's a bit wrong.
Yeah, it's totally wrong. Yeah, but everybody is bearish on China these days. Yeah, and as you know, we're following the development of money supplies quite closely. And in China, you know, we used to have credit growth at 40% last year. Then they basically stopped to 0%. It's like if you're going in your Ferrari. I don't know if you own a Ferrari,
no,
but
I'm not fitting in. I'm too big for the car.
But if you drive like, I don't know, 200 miles per hour and then you're stepping on the brakes till zero. This happened in China, and this had enormous consequences for the commodity markets. But now credit growth is already at 20% year on year. So it's growing again, and Chinese are putting in huge fiscal stimulus. So there's quite a lot happening. And therefore, I think as everybody is bearish on China these days, this is a very good sign for commodity prices and especially copper.
For a turn. Good, that's perfect. Thank you very much for the final sentence. I like that. And yeah, all the best. Enjoy the show. And I think it will pick up a bit, huh?
Thank you very much.
Thank you, Ronnie. Ladies and gentlemen, that was Ronald Stöferle, the head fund manager of Incrementum out of Liechtenstein. And yeah, you heard it. Probably they want to see gold at $1,000. This is very likely when we have the rate raise in the US in the next 2 weeks. Hopefully then when Janet Yellen puts it up maybe to 0.25%. But he's also getting more bullish now onto copper. And probably we see here also turning points when the credit rates are increasing probably next year again. And there's light at the end of the tunnel. That's what I said last year. I say it this year also, because I think we are totally oversold in those markets, and 2016 hopefully is our year. Thanks and bye-bye from London.